Indian weddings are as grand as Bollywood movies. Hi everyone, welcome back to Finance Buddha. I am Amisha. Just a heads up, you might find yourself spending over 50% of your savings in it. But is it a good thing or a bad thing? Well, it depends on your perspective. How about we explore this together? Indian weddings are famous for their grand celebration. But do you know there are some people who end up spending more than half of their life savings on it? It's like spending most of your annual salary on one just big event and stretching out your budget for next few years. Let's break down the typical cost of a wedding. Here's what you need to consider. First, venue. This is the largest expense, ranges from several lakhs to crores, depending on size and location. Second, catering. Cost adds up quickly from simple meals to elaborate feast. Beautiful decorations or might be outfits. This means beautiful decorations in palaces or normal anywhere, high-end outfits and exclusive ornaments that can be quite costly. Entertainment and photography to capture the beautiful moments of your life. And lastly, pre-wedding shoots and post-wedding shoots. Don't forget to add up these pre-wedding shoots, mehendi, sangeet and post-wedding shoot cost of receptions and family gatherings. By understanding these figures, one can plan wisely and align with the financial budget. Here's what the costs stack up against the typical earning. With an average salary of 7 lakh in India, saving 30% of it, one can save up to 2.1 lakh per year. Over a 30-year career, that is approximately 63 lakhs of savings. Let's compare the wedding expenses. A wedding expenses can be typically from 20 lakh to 50 lakh. Spending 20 lakh to 50 lakh is like spending 32%, 80% of your savings. But is spending a large chunk of your savings on a wedding worth it? On one hand, it's like a once-in-a-lifetime moment of your beautiful journey. If you're saving up for years, you might feel this is the best place to use your money. On the other hand, you have to make sure to keep the balance where you can enjoy the wedding and also have a financial peace of mind. The good news is that with smart planning and right strategies, you can have a fabulous wedding with keeping your finance in check. It's all about finding the sweet spot where you can create beautiful memories without any stress later on. You can have your dream wedding and secure wealth together, be a part of your life that is happily ever after. Now, if you're planning to have a big grand wedding and want to manage your costs better, there's an option called Marry Now, Pay Later. I will explain it to you what MNPL is. MNPL is a financing option that helps you connect with the caterers, decorators and venue and more. It comes with a lower interest rates. Here's a quick comparison. Wedding loans are offered by banks and can range from 50,000 to 1 crore. Interest rates start around 10% and can be higher, with 10 years up to 7 years, that is 84 months. Plus, you might face penalties for yearly payment. MNPL, offered by non-banking financial companies, NBFCs, MNPLs can go up to 25 lakh. They often start with zero interest rate for the first 3 to 6 months, after which the interest rates typically moves to 0.5% to 1.5% per month, depending on the customer's credit profile. This translates to an annual percent rate of approximately 12%. The tenure can extend up to 3 years, that is 36 months. Additionally, there are usually no penalties for early repayment. To understand and validate the information, check the reference link given in the description. Now, carrying on, here are the quick checklists for you to compare. First, loan amount. The amount of loan you need. Interest rate. Compare the ongoing and initial rates. Penalty for early payment. MNPL doesn't have one, but wedding loan does have. Over leverage credit. Make sure not to stretch your budget too thin. Next up, let's talk about bundling and unbundling of wedding services. This can significantly impact your budget due to GST rates. Let's compare this with an example. Case 1. Bundling. If you bundle catering with the venue, you could potentially avoid the higher 18% GST on the venue, paying just 5% GST on the combined package. However, if you also include decor and photography, the GST might apply separately again. Case 2. Unbundling. Suppose you book catering separately from the venue, you might end up paying 5% GST on catering and 18% GST on venue. Here's a simple example to illustrate. Unbundling. Catering 1 lakh with 5% GST, 5,000 GST. Venue, 5 lakh with 18% GST, 90,000 GST. Bundling, combined catering and venue. 6 lakh with 5% GST is equal to 30,000 GST. Understanding these cost structures can help you plan better and save on taxes. Coming up with an interesting topic, online trends. Online trends can be super influential. As a girl, I know how easy it is to get caught up with the beautiful pre-wedding shoots and trending ideas. It's okay to be inspired, but if it fits your budget. You can have a beautiful wedding without going overboard just because of a trend. It's perfectly okay to be inspired by what you see online. But here, the key is to integrate those ideas that fits your budget perfectly. Here are some few tips to manage your wedding cost. First, start early. Begin saving as soon as possible. Consider SIP in mutual funds. For example, if you invest 5,000 a month for over 5 years with an average annual rate of 12%, your investment would grow to 2.2 lakh approximately. Second, set a realistic budget. Create a comprehensive list of all your expenses. Think it of as a playlist. You want all your favorite hits in it without being endless. Third, be cautious about personal loans. Personal loans can be seen as a simple idea to spread out cost, but it comes with high interest rates. And if not managed properly, it can be a financial burden. Instead of depending on loans, try saving as much as possible and use if absolutely necessary. Fourth, avoid unnecessary debt. Try to avoid accumulating unnecessary debt. It's important to balance your spending with your ability to repay. High interest debts can lead to a long-term financial strain. Taxes. Do you know about the taxes on the wedding gifts? Cash gifts should be ideally deposited in your bank account around the wedding date to show as a gift. Property gifts are non-taxable, but you have to pay 5% stamp duty. If you generate rental from that property, you have to pay tax on that. Lastly, consider getting wedding insurance. These cover unforeseen events like natural calamities or cancellation. Insurance premium is low from 0.2 to 0.4% of your typical wedding cost. I want to hear it from you. Have you ever felt influenced by wedding trends or faced a dilemma with wedding cost? How did you handle it? Share your thoughts and questions in the comment section below. Whether you choose to splurge or keep it simple, the key is to plan simply and enjoy the journey. With smart planning and right strategies, you can create a long-lasting journey while also ensuring a secure future. If you like this video, give it a big thumbs up, subscribe and hit the notification bell. Thanks for watching and we'll see you in the next one.
Find the right loan from the right lender.